Hey traders, this is Ron Haidt at Market Tamer. Happy Wednesday. I am back from vacation. It's good to be here with you. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues shall always be addressed with your financial advisor. We're using TradeStation this evening. Still, each day represents a single day in the market. The blue line is the 8-day EMA. Red is 20-day EMA. Orange, 50-day SMA. Purple, 200-day SMA. Purple and orange are both institutional moving averages. So just like when we were using Thinkorswim, volume green is up, red is down for the day. So where do we sit? Well, we're above the 50-day SMA, that institutional moving average, on the SPY, which is the S&P 500 ETF daily chart. That remains the key litmus test. We get below there, the bulls have lost their edge for now. The target becomes the 200-day. If we take a look at the diamonds DIA, yesterday we lost it. Today we back tested it and we still closed lower. So right now the Dow is the weakest. It has broken support. It's failed to back test. Now, does that mean the end of the world is coming? No, it doesn't. But now it means, again, the sentiment is shifting from bullish to neutral to bearish. Worse, the blue line, which is the 8-day EMA, has crossed below the 20-day EMA. Whether we use a 5-day EMA or an 8, whenever there's a cross, that is a mini technical sell signal. So we're getting a technical sell signal on the shorter term time frames, 8 and 20 days, and now we have a close below the 50-day. In fact, 2 straight days. Target, the 200-day, which interestingly enough, if you look, sort of comes in with some of these lows. I mean, actually, you could argue that it's just a little above some of those lows, but this is the point. This area around 255 is now the target. That's about 400 points lower than where we closed today. Take a look at the Qs, the NASDAQ. Yesterday, it closed below the red line, the 20-day EMA. Today, back tested, failed, target about 182. The orange line, 50-day SMA. We break that down to the 200-day. If we take a look at the IWM, the Russell 2000. If I zoom back out here a little bit, there, you can see the all-time highs over here. We started to break out, and now we're coming back. But what's interesting here on the IWM is notice how the 200-day in purple and the 50-day in orange are both right around 155. That's creating confluence as well as this little swing low here. I would set alerts probably, even 154.5. Something just underneath these little lows here. So let's say 154.50. If we get a close below there, we took out 2 major institutional moving averages. We even took out a swing low. Target right back down here around 149. And the next target, holy guacamole. Technically, would all the way be back at the December lows. Not saying we're going to get there, but technically that would be the target. We take a look at the MDY, the mid caps. They're below their 5 and their 20, but they're still above the 50, still above the 200. I want to watch that, both of these, and then watch these, the double bottom here, right around 337, because if 337 falls, you guessed it, same picture. Now, inside TradeStation, $VIX.X will give us the VIX. We had an explosion Tuesday, and right now 22, for whatever it is marking a little bit of reversal area. It's still at 1940. I don't use technical analysis on the VIX, the volatility index, the fear index, the same I would on stocks or ETFs. This is a little different animal. Nonetheless, we've had a surge. We've taken out previous highs. That I would say is significant, but the fact we're getting some reversals at a particular price point or percentage point, if you will, is to me irrelevant. Right now, the trend is up. We haven't had a massive spike to see a big reversal yet. Right now, we're just getting started. So if I go back to the diamonds, the DIA, this is the one that's most concerning, the fact that we're already below the 50-day. I would give, in my opinion, this is a real target right now. I would say, looking out, 254-ish, that's the odds-on bet from a technical perspective. What would the bulls need to reclaim these charts? New highs. That's what would be required. If we go to the SPY, if I zoom back out here, you can see we did set new all-time highs. The 50-day is still holding a support. To re-energize the bullish trend truly, we need to go back to get new highs. So right now, caution is definitely warranted. Bears are starting to get an edge on the Dow. The S&P's holding up, say second worst, and then the Qs are holding up arguably the best, that they're just below the 20. But if they break their 50, then you come down to the 200. So that's pretty much it. There's no reason for a long video tonight. The rest of the stock market will follow, so to speak. 80% of the stocks are going to follow major averages. And right now we just have some selling pressure coming in. I know there's a lot of talk about out there about, oh, it's Iran, oh, it's trade wars. Well, the trade wars is the same thing they were talking about here, and then we go right back up here. So they were wrong here, then they were wrong here. Now they're using it again. So trade what you see, not what you think, is how I like to approach the market. And right now, short-term bullish is not the way to play, in my opinion, because of what the charts are saying. We're breaking time frames, breaking moving averages. Sentiment is beginning to change. Now, if I really wanted to be somewhat more of an aggressive bull, this is also what I would look for. Using the Qs as the example, we're below moving averages. We now need to retake these moving averages. The moment that happens, they're very, very short term, turns back to being bullish. If I bring in the Dow, what will we need to do here? Get back above these moving averages to at least be short-term bullish, back above all of them, the 8-day in blue, the 20-day in red. All right, so I'll be back with you here again tomorrow. Wish you guys all the best, and I hope it helps. See you later.